Hello and welcome to this episode of Equity Sahi Hai. Joining me today is well-known financial planner Brijesh Dalmia. Thank you very much, Brijesh, for joining me on this show.
Thank you, Vivek.
Brijesh, can you tell us a little about systematic withdrawal plans? Because we live in very difficult times. There are job losses all around us. People are either seeing a loss of income through a job loss or a salary cut. And to replenish the monthly need of what you really need the money for, is SWP a good way to draw down on your savings? And can you tell us a little more about SWPs?
Oh, yes. So, Vivek, I think SWP makes tremendous case for using the investments you already have in mutual funds to use it for your expenses or your needs in these difficult times. One mistake people have done in the past is to withdraw funds from equities as SWP or balanced funds as SWP, which has seen a lot of drawdown in terms of the equity valuations and which may or may not be recovered in the near future. So I think SWP should be made mostly from a debt fund, even if the returns are lower, which doesn't have the risk of erosion of your capital in case of equity markets not performing well. And the return should be as per the market condition. Many investors I have seen that they do the reverse calculation that I want this much return and where should I do the SWP from? And their expectation is always a percentage or two more than the prevailing interest rates in the economy. I think one should not do this. One should always think about the returns expected from the asset class, the investment they have made. For example, in these times, if you have debt funds giving you a 6% kind of return, you should do SWP only to the tune of 6% of the total investment and not more than that, because then the returns may not match your portfolio. And you should avoid withdrawing from balanced funds. The best that you can do probably is that have an asset allocation in your SWP plan also, that maybe 50-75% of your assets will be in debt and you withdraw from there and keep 25-40% of the money in the balanced fund, and then you can rebalance it over the next maybe 1 year and 2 year and 3 years time. So SWP makes a brilliant case because of its tax efficiency, its predictable cash flows every month in a systematic manner. And yeah, so one should take advantage of SWP. Yes.
Pleasure talking to you, Brijesh Dalmia. Thank you very much for joining us here on Equity Sahi Hai.
Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.